I think the pessimism that we're seeing is very similar to customer service rating. So imagine that you receive a customer service and then soon afterwards you get emailed a survey asking you to rank the service, right? Very likely, if you're happy about the service, you're not going to give any feedback. But if you want to log a complaint, you will just let it out. And that's exactly what we're seeing in the markets and how average Chinese are feeling as well. You hear definitely a lot more people complain about how they feel about the weak economy, like how they are losing their jobs, etc. But that is not really the full picture, right? There are many, many sectors, there are many companies that are actually doing very well in our micro research when we are doing company analysis. And the reason why I think the pessimism is more skewed towards investors is that many investors are always focusing on equities, right? Like, for example, even if we turn on the TV, most of the indices, most of the companies that you show are their stock prices. But Chinese assets are more than just equities. And there are other Chinese assets. For example, if you're trading Chinese rates, fixed income are doing phenomenally well this year. Even if we go back to equities, people tend to have relatively short-term memory. I mean, the overall, the market, be it onshore or offshore, has done pretty well since mid-January. And now we are just giving back some of the gains. With that said, again, the pessimism sustains. People feel, investors particularly, feel that they are more in this downward trend, that Chinese equities have been performing very poorly for many years in a row. They totally forget about the recent gains. Actually, if you use a different time frame, from time to time, you will note that there are always abundant opportunities to generate alpha and positive returns in China.
Okay, so talk to us about some of that, because no doubt what you're saying and what we're hearing a lot is that while there are some short-term pains, the long-term story is still intact. So how do you put your money to work in this market then?
Don't get me wrong, I'm not necessarily too positive on the long-term story, and I don't want to give a view on the long-term story. I think the abundant opportunities that I was alluding to really exists in the market all the time. We always like China or US for the reason that they are deep markets. So let's forget about the long-term outlook for now. Let's just look at the market itself. The economy itself, as well as different sectors, different companies, are undergoing such a large transformation. So there will definitely be companies that win, and there will also be companies that are missing out opportunities in the process. So in the past year or two, for example, if we just zoom in on the Chinese equities, what have been performing very well? The leading banks, the oil majors, some of the telecom companies, right? So they all fall into this big category called high quality, high dividend yield. And they have been performing very well. Sector rotation will always be the theme. So very soon, I can imagine within a matter of 6 months or shorter, we could see market attention being reshifted to TMT again or some of the other sectors. So those quick rotations and the deep market itself gives us enough confidence that people can always make money in the market.